Hello and welcome to Empowered Divorce Decisions. I'm Jamie Blum. I am a CPA and a CDFA, which is a Certified Divorce Financial Analyst with Argent Bridge to Divorce. And I'm here with Elina Cannon today. Hi, Elina.
Hey, Jamie. Thanks for having me, and thank you everybody for joining. I'm Elina Cannon. I'm the private wealth advisor and divorce and investment strategist here at Argent Bridge to Divorce.
So welcome and thanks for joining us today. We're here to talk about cash and investment accounts related to divorce. Cash and investment accounts are just part of your entire schedule of assets and liabilities that are put together related to your divorce. And it's also called a property report. There are other names for the report when it is put together. But we're doing this in a series to help you understand the different implications and the different decisions that need to be made related to the different assets and liabilities that you may have. So today we're going to start with cash, and Elina is going to tell you a little bit about that.
Absolutely. So with cash, and what we mean by cash and cash-like accounts, so these could be checking accounts, savings accounts, money market accounts, so accounts that you have at your bank, something like a Bank of America, a Capital One, USAA, financial institutions similar to those that have these types of accounts, as well as physical cash. So cash that you may have in your home in a safety deposit box or elsewhere that's material significant. I wouldn't worry about, pocket change, a couple of dollars here and there that you may have in your wallet or in your desk drawer or something like that. But here we're talking about really like material, physical cash that you want to make sure that is listed and captured in that property, that asset and liability schedule that Jamie talked about. That also is something that we absolutely can help you with. That's something that we help our clients with every single day. So with cash, what's really important as an asset, you have to inventory it all. You have to make sure everything is captured, fully disclosed. Once everything is inventoried, you have to value everything. Cash, it's a little easier to value. When you value cash, it's the balance. What date to use to pull the balance. So that really, it depends on a couple factors. It depends on how you're settling your divorce. If you're settling just, through settlement, through negotiation, through mediation or litigation. If we're going the litigation route, then it's really dependent on the state and the laws that govern how assets are split in divorce. So that could be either like data separation, or it could be a date closest to trial, or it could be final date of divorce. Another important consideration is titling. So if these accounts are titled in your sole name, in your spouse's sole name, or jointly together, and then classification as well. That's a really important consideration. And we have another video that goes deeper into classification, but super high level. What I mean by classification is if these accounts are classified as marital, separate, or hybrid. And so what marital means is the asset, since we're talking about cash. So here, if the cash was earned during the marriage, then it's considered marital. It's considered marital assets, so marital cash. And then what that means in divorce is it's subject to division. Both spouses have essentially an entitled right to the asset, the cash. Separate means that it was either brought into the marriage or it was received as a gift or inheritance. It was kept separate. And in divorce, separate assets, separate cash remains separate, remains the asset of the spouse, and it's not divided in divorce. And then hybrid means that it's part marital, so part of it gets split and part of it is separate. So part of it just remains with the spouse whose asset it is. And so that at a high level is cash and cash considerations. And then next, Jamie will discuss investment account and investment account considerations.
Thank you, Elina. So for investment accounts, what we're talking about here is also known as a brokerage account. Usually they're held at places that you've heard of, like Charles Schwab or Fidelity or T. Rowe Price, something like that. And what they normally contain are investments such as stocks, bonds, ETFs, which are exchange traded funds, mutual funds. It could even have cash in there as well. And in looking at that account or accounts, you're going to need to look at the same considerations that Elina has talked about. You need to look at, what classification is it? Is it marital? Is it separate? Is it hybrid? You also need to look at what date are you going to value this account? And, certainly we know when it's related to the stock market, things change every minute. If not, at the end of every day is usually when something might be valued. You would say, if it's going to be valued on December 31st, then we'll look at the end of that. And then we also, in the consideration related to investment accounts, are what's the cost basis? Because the difference between what an item was purchased at and what it was sold at, there's a taxable gain in there. And normally what we would do is to try to make sure that those taxable gains are shared. And you decide in what percentage it's shared, if we're talking about equally. So then we might talk about what's called a like kind or an in-kind exchange, where if there's 100 shares of a certain stock, you would each get 50, and you go down the line and you each get the same number of shares of all the holdings to the extent that you can. When it comes to bonds, bonds generally can't be split in half. So you would do something called an offset. So let's say the bond is worth $100. We would find $100 worth of a different security or other asset that's in there. Maybe there's cash in there, and one of you gets the $100 bond and the other person gets $100 worth of some other security or cash that's in that account. So we're looking at things like what's the value, but also what are the tax implications of that account. And so that brings us to the end of today's session talking about cash and investment accounts. And Elina is going to tell you a little bit more.
Thank you, Jamie, and thank you all for joining us today. If you have any questions on dividing cash and investment accounts in divorce, or any other questions related to financials in divorce, please reach out to us. Our contact information is on the slide. We're happy to be your resource. We want you to stay informed and stay empowered. Thank you again.